Welcome back. In today's quick finance lesson, we're diving into a foundational concept that affects both saving and borrowing: interest. By the end of this video, you'll understand what interest is, why it matters, and how it works. Let's get started. Interest is basically the cost you pay when you borrow money, or the reward you earn when you save or invest. Think of it this way. If you borrow $100 from a friend, they might say, "Sure, but I'd like a little extra back for letting you use my money." That little extra is interest. Why does interest exist? Banks and financial institutions use interest to bridge the gap between savers and borrowers. When you deposit money in your savings account, the bank uses some of those funds to make loans to others. They pay you interest for your deposit and charge a slightly higher interest rate to the borrower, earning a profit from the difference. Simple interest is calculated only on the original amount you borrowed or saved, also known as the principal. For example, if you invest $1,000 at a 5% simple annual interest rate, you earn $50 every year. Over 3 years, you'd earn $150 total, always $50 each year. Compound interest, on the other hand, is interest on interest. Suppose you invest that same $1,000 at 5%, but with annual compounding. After year 1, you have $1,050. In year 2, the 5% applies to $1,050, so you earn $52.50. By year 3, you earn 5% on $1,102.50, which is about $55.13. Over time, compound interest can significantly accelerate your savings growth. Interest works two ways. When you save or invest, higher interest rates mean your money compounds faster, helping you reach goals like an emergency fund or down payment sooner. When you borrow, higher interest means you'll pay more over time. That's why a small difference in interest rates can have a big impact on the total cost of a loan. There are some tips you can use when investing or borrowing money. Shop around for the best interest rates both for savings accounts and loans. Aim to pay off high-interest debt, like credit cards, quickly to minimize the total interest you pay. Use tools like loan calculators to compare simple versus compound interest scenarios before you borrow or invest. There you have it, interest in a nutshell. Understanding how interest works empowers you to make smarter decisions, whether you're saving for the future or taking out a loan. If you found this video helpful, don't forget to like and subscribe for more bite-sized finance tips. Thanks for watching, and see you in the next video.